Okay, I think we're back. Are we back? Can you guys see me? Can you hear me? I think we're back. I don't know what the hell happened. Hold on. Okay. If you can see me, if you can hear me, drop a line in the chat. Please and thank you. Can you hear me? Alright, I think we're good now. This is ridiculous. Hold on. I gotta update everything. I don't know what the hell happened. Hang tight. Apparently I streamed for 2 minutes, so I've been talking to the air for 30 freaking minutes. I'm so mad about that. I guess I mean, if you want to go watch what I said, I'm sure it's on one of the backups on Instagram and on Kick and Twitch. How annoying. So it looks like both X and YouTube went down, which are like my two key places where people watch. I found it funny that like no one was writing. The chat was like a little too quiet. Audio's a bit weaker than usual. We are live. Let's go. I like the shirt. Thank you, Marcel. Okay, can we hear me? I don't know why the audio is weaker. I haven't touched any audio setting. I don't know what happened, to be honest with you guys. Something just... Do me a favor, guys. Can you like the stream and just share it out or whatever? At least like it. I know some of you guys don't have friends or whatever, but friends in the sense that they'll watch finance stuff, but at least like the stream wherever you're watching. So that way it gets pushed through the algorithm a little bit, because I've been talking to the air for 30 minutes and I'm a little bad. Oh, that sucks. That sucks. All right. Are you guys digging the raccoon? I'm digging the raccoon. Okay. So, everything should be good now. Can I just get you guys hear me? Twitch was down also? I don't think it was. I pulled the... Hold on, now I gotta check. I don't know what the hell happened. This happened before with YouTube, and it just, like, totally shat the bed at one point. I pulled the... And, hold on, let me see. I said some really good stuff. I'm a little salty about it. I had a whole thing. Alright, maybe it did go down. It just shows I'm live now. At least I'm live now. Alright, whatever. We'll deal with it later. We'll do it live. Anyway, I don't even know where to start. That kind of sucks. Yeah, if you're in the Discord, I know, Neo, you pinged me. Just ping me like 15 times. Because I don't have the Discord open, because I'm normally looking at the YouTube chat, not the Discord chat while I'm live. But if I see like 15 plus or whatever, I'll know something's wrong. So thank you, though. I don't know where to start. I really don't. We went over everything that we're looking at for the week. All right, guys. We're going to do a lightning run, because I'm going to assume none of you are here. So, again, do me a quick favor. If you're coming back, if you're finding the stream again, if you could at least like the stream, please, because I know a lot of people I lost a ton of viewers from that. I was wondering why my view count was so stagnant. Do me a favor, like the stream, comment, write hi in the chat, whatever. I'm going to do a very, very rapid rundown of the market for this week, because we already went over it. The market's already open, so we're going to do a quick rundown. PMI today, 9:45 and 10 o'clock. That's now. Powell, after hours today, 8 p.m. Tomorrow, Bowman to testify at the House at 10. Wednesday, I think Wednesday was pretty quiet. ADP employment, pre-market, 8:15. Third, and NVIDIA CEO meeting the GOP Bank Committee at 2. Thursday, jobless claims, pre-market. And Friday, core PCE, Michigan sentiment, and consumer credit. That's your catalyst watch for the week. As it pertains to the market, let's push everything into high speed. Here we go. Basically, for the market, I anticipate for this week that we're looking at more than likely some level of a retracement down between now and Wednesday. Not necessarily a bear move, but at least the market pulling down a little bit to at least have some level of a bull cool off from this move. I'm going to try to talk like I'm 1.5 speed, so stick with me and don't put me any faster because you're probably not going to be able to. You're not going to be able to understand what I'm trying to say. What I'm looking at keyly, or most importantly, this is the Qs, not the SPY. Here's the SPY. I'm looking for this Thursday high to hold. So that's 675.56. That's my most bullish scenario, that we come down, retrace that level, and bounce off that level. In the second most bullish scenario, I'm looking for 670.23 to hold. That's that thick red line on this chart. If you've been watching the program here a while, you know how important that level is. And in a more bearish, in the least bullish but still bullish scenario, we come down to roughly around the POC down here in between these two LOIs of 66455 and 66305. If we do a quick and dirty fib retracement, which I did live, and we're going to do it again real quick and dirty. Here we go, to see how the math aligns with my predictions here. That 67556 top of the Thursday candle aligns with that 0.236 retracement. Roughly around that 0.382 retracement is that 670.23 spot, and roughly around the GP is that spot that I was telling there in the most bear scenario. So we're looking at some level of retracement here. However, I don't believe that will happen. Now, looking into today in general, I do anticipate more downside in general to come. However, what I will price in as the least likely scenario, but still a possible scenario, if things are mega bullish, uber super duper bullish, we get a bull push here today, close over Friday's candle, yes, over Friday's candle, believe it or not, and then come back down to retest this general area where we are today, where we open today, later in the week before continuing higher. Whew. Oh, also, volatility. So volatility, I don't really anticipate volatility to go higher than 1830, maybe just like drop higher if I'm anticipating more downside through the rest of the week. But I do think that the high that we opened at today on VIX, I don't anticipate we're going to see more volatility throughout the rest of the week, or actually for the rest of the year. This is going to be the last high, in my opinion, on volatility, maybe a drop higher. So we'll give it a little bit over. We'll call it 1850 in case we do see that down or deeper down pull on the overall market in the form of a retracement. I guess you could really extend it to 2030. So if I'm going to hedge my bets, I'll say we won't go higher than 2030 by the end of the year. Just to hedge my bets a little bit. But I really don't think we're going to go much higher than this because I don't anticipate the fall from SPY in terms of the retracement to be a volatile one. If anything, it would be a slow and plodding move in my opinion, which will cause volatility to increase theoretically, but not at the degree where it is increasing substantially so to cause a harsh markup in the VIX in general. So I do think volatility is either topped out or near topping out for the rest of the week. Or rest of the month, rest of the year, which is also the month. VIX, as long as it stays under 100, you're sitting pretty bullish. Quick recap of the Mag 7. NVIDIA is looking pretty solid as long as you're staying north of 171.58. 171.58 is where we're going to see a lot of investors get a little bearish, a little worried there. Now, we did cut underneath that on 11.25, but we moved back up very sharply, very quickly the same day. I think we were under there like 30 minutes to an hour or so before pushing higher. So if we do see a break and push under 171.58, this is where I'd be concerned as an investor, and you're more than likely going to pull down another 20 bucks or so on NVIDIA. However, you stay north of that, you're going to be just fine here longer term on NVIDIA, at least at the end of the year. Google is looking pretty solid here. If we look out on the weekly, I do anticipate this kind of price action to happen here on Google through to the end of the year, and maybe in the last week we get this. So basically a repeat of 1031 to 1121's weekly candles here on Google through the end of the year, getting 1 to 2 weeks of bearish price action to just sideways kind of shot move before getting another mark up into the end of the year on Google. Microsoft is looking okay so far. If we go back to the daily chart, bounced at that 200 MA. I actually said before the live stream was cut off that if as long as it holds that 485 spot, I do think you're going to see Microsoft mark up to at least $500 by the end of the year. However, that's a very tight risk spot. It's only $2 to $3 lower than current price action. The low of today actually got in that range, 484.65, and came back up. So questionable to see if that holds or not. I guess we will see. Going to Meta. Meta is looking like we're going to get some level of retracement here. I do anticipate Meta to come down to around 615, assuming it can't break the spot. You got a tricky spot here on Meta where you are technically above the POC. You're above the 21 EMA, but you're below these two LOIs. You had a harsh move up. Getting some level of retracement to around the 615 to the 620 spot, I believe is very likely here on Meta. Looking at Apple. Apple's kind of grinding to the upside here, looking pretty solid for a continuation to the upside or further upside on Apple in general, assuming it holds north of like 274. And lastly, second to last, Tesla. As long as it's over the 419 spot, Tesla's actually looking pretty good on the daily and on the weekly chart for a continued upside push here. Do keep in mind the 50 MA is right around this 433.31 LOI, so it needs to break and hold over that if you are a bull here on the daily chart on Tesla. Lastly, Amazon. I anticipate Amazon to come down around 228-ish before getting a continued rally into the end of the year. I think it needs a little bit of a cool down here before getting a little bit more love. More bullish scenario would be coming down to only around 230 before getting a rally and pushing to the upside. Other side of the coin, if we find volume here today or tomorrow, you could get a quick move up, quick rally up to fill this VP gap and also get near the low of this candle off of earnings at 243.98. Somebody clocked me. How long was that? That was not bad. That was like 7 minutes. And I did roughly around like 25 minutes worth of what I said already. So you just put it in double time. All right. Are we all still here, though? I mean, now I'm worried that if the stream cut out again, I quit. Okay, we're here. We're live. I have to keep this other window up to make sure we're live. I'm really happy because, as some of you know, I am looking to move soon, and the internet where I'm moving should be not third world internet. I should have more than one ISP provider, so we should be okay. We should have better streams, should have better quality. Everything should be better in the long run. So should be. We'll see. All right. Marcel says he's exhausted. I'm exhausted. Okay. Now. I don't even know where to start now. What I did say that I didn't include in that fast forward spiel, I would expect, like I alluded to, where we're looking at SPY could go today. I would be very cautious today. We had a really killer week last week, like in terms of price action. It's even easier to trade. I personally had an awesome week last week because we're near these highs that we were at last week. How do I say this? One of my favorite phrases, I used to say this in my old community before I joined my new community, Exclusive Trading, which is links in the bio if you want to check it out, is sometimes the market's too bullish to be bullish and too bullish to be bearish, where things are, again, the prevailing wind, like things are looking to push to the upside, but also there's an argument to be made that it needs to cool down. You need to wait a little bit, right? As a day trader, obviously you can make money off this move. I'm more concerned of there being some level of a pullback here in the short term. I would rather be more cautious today and tomorrow and getting through Wednesday and then going, okay, now we can hit the gas a little bit more if what I foresee happens. Now, I don't know if I mentioned it. I think I did mention it this time around. Now I'm confused because I've got the two streams in my head of what I said, what I didn't say. What is the more bullish scenario, which I would give a 10% likelihood of happening? I would give a very low likelihood of it happening, would be, again, to close over Friday's high. Oh, the other thing I talked about, keep in mind that this move up that we saw on the overall markets last week, although on lower volume, typically you want to take that with a grain of salt of it being, or leaning more bearish, right? Because you're pushing up on lower volume. That typically indicates weaker bulls, right? And that bears tend to step in that environment. In this scenario, because of the holiday, that may not be the case. So I see some people talking about this on social media where they're looking at it and like, oh, we're moving up on low volume, better short it. Like, okay, don't. It's not a one size fits all, especially when you're looking at any form of technical analysis. If you always say, if this always happens, then this always happens, like if this, then this always, you're going to be wrong. Like, I'm sure many of you draw shapes and patterns and whatever. If you only look at the one thing, you only draw the bull flag or the bear flag, expecting to break up, break down, whatever, just because said shape has formed on the chart, it doesn't happen. Sometimes, right? Because you have to take in account everything. You have to look at not only just the volume in this scenario, but the candles, the time of the year in this case, volatility. Like, there are many other things you want to include in that recipe of making a decision. So I would be very cautious listening to people who are telling you a push up on low volume is a bearish thing, because in a vacuum, if you're looking only at that and nothing else, then it can be a bearish thing. But because of the time of the year, I don't perceive it as a bearish thing. And as I'm talking about this, the market's getting a nice little rally here. But again, like I just alluded to, this is too bullish to be bullish, too bullish to be bearish. Where I don't want to be overtly a bear here, because I do think that the strength in general is to the upside. We're going to see more bullish directionality to the upside through the end of the year, at least at this current juncture. But short term, not really the time to chase. We'll see, though. We'll kind of see how the day works out. It's looking like we're going to get a good amount of range today, is kind of what I'm alluding to. Do I want to short the highs? Maybe. Where it would make a good sense for a day trade for me today, if I was to take a bear stab, and we're talking a day trade, let me make that abundantly clear, would be to kind of short Friday's highs. So Friday's highs are 683.67. You could also short the gap fill, which we're getting very close to. It's about $2 shy of the gap fill. You know, these are things to consider if you wanted to pick up the penny in front of the bulldozer, as I like to say. I might do that today. And you can tell, obviously, as you're watching or listening to me, it's see and hear the hesitancy in my voice, because it's not... You saw last week, as I was saying, how we had the golden setup, basically 2 days in a row or 3 days in a row, where everything was pointing the same direction. Volatility was participating. We had 8, 9 things saying, be a bull, essentially, right? Today, it's not so much like that. And it's not that it's diverged by any means, because as you can see, IWM's pushing up nicely, Qs are pushing up nicely, SPY's pushing up nicely. So all the indexes are actually on track with each other, which is a good sign, obviously. Even RSP is pushing up nicely. So everything's pushing up. Volatility is pushing down. So this tends to be a perfect setup, right? And the VVIX is also coming down. So we have a lot of contributing factors here supporting a bull narrative on the day in general, where things should be bullish. Now, the only issue in that is here, that we've rallied so much already and kind of need some level of a cool down. That's why I'm saying through now and Wednesday. It's very hard for me personally to be a persistent bull or a persistent bear after a hard move one way or the other, right? As you watched me last week, like the times to be a bull, we're here and we struck. If you're watching the live with us, if you're in the Discord, I had a fantastic week last week. I had multiple 100, 200% gains, whatever. It was a really good week. But those were very slow, calculated moves, taking advantage of the prevailing wind, as I call it, on the market. And today, again, I want to stress it again, you want to be a little bit more cautious. The nice thing about this week in general, with the exception of Powell speaking, I'm going to pick my words carefully. With the exception of Powell speaking, with the exception of the NVIDIA CEO speaking, the other catalysts, not that they're bad, but they're not random in a sense. And I think I talked about this before the first stream cut out. When we have these catalysts of Fed speakers speaking, if you remember, whatever her name was, Cook, basically this move here was caused by Fed Cook. It just was. She struck a little bit of fear, and then obviously bears piled on. There was a move. There was the opportunity there to suck out some bulls from the market here, and they struck, right? When we have data, right? We have, like I said, we have jobless claims this week. We have ADP data. We have Michigan sentiment. This is a number, right? That people can decide if they're bullish or bearish based on said number. And that's where it stops, right? The buck stops there. When someone's talking, there's uncertainty, and you have to roll in the human element of things, of saying, they're probably going to feel a certain way about things. And as I'm talking right now, I think I want to take a short. I'm going to take a 680 short. I'll go half size here. All right, I'm half size on the 680s at 90 cents. Sorry. SPY today, 680 put at 90. Sorry, as I was talking, I saw my chance here. But those random catalysts are what make the market. This is me stepping in front of the bulldozer, like I said before. We're looking for a pull down, target around here, 680, 64, and kind of go from there. But when we have these when we have these Fed speakers speaking, we have these random catalysts, the human element of the market, right? When we have that happen, that causes things that are unpredictable, right? Because if Fed Cook says XYZ or Powell says whatever, we're now guessing on what they're going to do in the future, because these are people with power. Even if Trump says something, right? These are people with power and influence over the stock market, and we don't know. We're judging based off what they're saying, something, right? And then we're going to just guess what might happen in the future, which makes it very hard for us to do our jobs as traders, right? So this week is actually pretty clean in the sense that we have hard data, which we can make decisions on, which is good, but we have less random BS. So that's nice. That's kind of the point I'm trying to make here, is that when we have weeks where there isn't that randomness, it's easier to play price a little bit more stringently versus a time where we have a lot of randomness and we got to just pick up the pieces based off the reactions of that information. So we'll see what we get here. All right, now sitting around 98, I'm going to take a little trim here off the POC. And another trim now. There we go. Nice and live. All right, there's 20% for you. Bang, bang. Just slap a stop on it. Because like I said, I don't want to be short. There we go. All right, I'm going to go runner size here. Again, the reason why I'm being so heavy on this is because it's a 0 day and I don't want to be short. That's 28%. Tap in the 21 EMA. In a perfect world, we get down to 680.64. So about 30 cents more. So I'm just being realistic in my expectations here. We could get lower, and if volume taps in, we could even drive even lower, which would be great. But now at runner size, 30% gain for 3 minutes of work, I think is fantastic. Tap a stop loss on, we're rocking and rolling. We got nothing to worry about. What do you think, guys? I haven't been missing out on the chat. So Toby says he has a headache. I'm sure that's from before when I was rambling. Omar says, oh, good. Eddie with the year. I dropped you a year, Eddie, before. I saw you in the chat, so I don't know if you heard it, but this one's for you, my friend. Dropping a year for you. All right, let's see. If we break the 21 EMA, I'll probably trim half my runners, like I said, around 680.64. And then, again, I don't want to be short. I really don't. We got the 200 on the 5 minute here as well. All right, my plan is going to be trim half my runners at 680.54, trim the other, I'll trim a quarter at 680.37, and I'll leave a quarter on. If I get stopped out, I get stopped out. But either way, nice 30% on the lion's share of my money, or 28%, which is pretty solid. So now we got some risk-free runners. We'll see what happens. Again, I went half size, so be out straight. Brutally honest with you guys, didn't make a lot of money on the trade, right? Because the risk wasn't great, but still made a good percentage gain here where I'm making a little bit of money, start the week off nice. You know, I want to pick my spots very carefully. And again, there is the opportunity to get a little bit more of a pull down here. So maybe I could walk with, if I'm lucky, 30 to 50. I'll say $40 to $50 a contract if I'm lucky. Oh, here we go. Get my first price target. All right, we're going to trim quarter or half runners here. Take that. Thank you very much. There's 37%. Sorry, 36. Bada bing, bada boom. Notice that wick. Look at that price. I said basically this was the high of this candle. That's what I was eyeing. This like whatever this 680.64 spot. The low of this candle was 680.62. So that was definitely a good time to to trim. So now I'm in just half size on my runner size. So theoretically, if you started with 100 and going to runners, you're down to like, because I know this is a question I get quite a bit. If you start with 100 contracts theoretically and going to runner size, maybe you've got 20 left, right? Just again using round numbers for simplicity. And then if you trim half your runners at 20, now you have 10. And then if I get here, around this level, 680.63, I'm sorry, 680.30-ish. From that 10, I go 5, and then 5 that are left, you know, whatever. And either way, like I said, a stop's on, so no money lost. It's great. Marcel says, nice play. Thank you, friend. Omar dropping the GGs. Marcel says, half size is still so small for me, but maybe... Dude, quick $50 is awesome. So think about it this way. In America, because I know, Marcel, you're not in America, $50 is... I mean, well, let's not joke about minimum wage. Let's just joke about realistic minimum wage now, which is like $15 an hour. It's still 3 hours of work. That's how I always equate things. Like, hey, man, flip burgers for 3 hours, or I could trade a 0 DTE for about 4 minutes. You know, $50 is $50, my friend, like you said. That is all it's about. So we're getting a little bit of a... You're going to have a little bit of consolidation here. This is definitely one you want to keep a stop on, for sure. POC is here. The 21 EMA bulls are showing some support. So I do anticipate to get stopped out unless we get a sharp reversal in the next, like, 2 to 3 minutes. Just keeping it real. So if this... Actually, what I'll do, I'll put my money where my mouth is. I will close out my position if we don't fire back down next, like, 2 to 3 minutes. That's about the extent of that I want to give this play at this point in time. So we'll see what goes. Marcel says, same here in Germany. Great for some perspective. Yeah, man. You know what it is? And this is probably the best... I mean, I'm sure you know this, Marcel, because you probably heard me say this, but for everyone else listening in the chat, I think there's a point in time where some people, when they trade for a while, they don't equate trading money with real money. Right? For some reason, when we trade, you could drop $100, $200, right? $1,000, $10,000, whatever it is on a trade like that. But you will drive to a gas station to save 10 extra cents. That's like 3 miles down the road. Or you will try to save $1 on your streaming service or whatever. I get it. It's just funny when we don't equate those things, right? For some reason, because we think when we're trading, these bigger numbers are worth less, but they're not. They're worth more. Right? The dollar is still worth what it is, and you have to make that equivalence in your head. Otherwise, you don't respect the money you're using to trade with, and that's really important. That's a painful lesson I had to learn, to be honest with you. You got to learn to respect the money that you have to trade with, because it's a privilege to even be trading, especially in today's economy where a lot of people are having a hard time scrimping together ends to meet. I'll tell you a sad story. If you guys want to hear a quick sad story. I am looking to sell like little miscellaneous things around the house because we're moving. So I'm putting up on like Facebook Marketplace and, you know, selling it, whatever. And I put up a table for $40, just trying to offload it, right? Nothing crazy. And a woman reached out to me saying, can I buy the table off of you 3 weeks from now? Because that's when I get my paycheck or whatever. Or that's when I have enough money where I can afford it. And no necessarily shame on this person, but this is going to sound messed up. I would find it hard. There's been times where I've struggled with money, and I have never struggled so bad that I had to wait for $40 for the end of the month. And everyone's got their own situations. I get it. And so I'm not trying to be insensitive to that. But if you're struggling for $40 to buy a table and you need to wait a full 30 days to get $40, you probably should be doing other things to try and generate more income, whatever it is, like something. It might be a little insensitive to think that way, but I've struggled before. I've missed out on making money, and I've missed out on the opportunity to make money. And I've been not broke, thankfully, but I've been pretty unfortunate straits in the past, and I've figured it out, right? But I've never been only $40 to my name broke. And I feel like a lot of people are like that with, unfortunately, drugs and alcohol abuse. I don't know if anyone else can agree or disagree. Am I being insensitive? I don't think I am, but you can let me know if I am. But and I feel like people, especially you guys in this community or in finance in general, can kind of understand that, because a lot of us understand discipline, right? And even if you don't, if you're recklessly trading 0-day options, you kind of understand a little bit more, I think, than people who just have no financial literacy, I guess is what I'm saying. So, I don't know, there's probably a deeper issue there in general with people not even understanding financial literacy, which is part of the reason why I'm doing this program, to hopefully teach you guys things, which is a much deeper realm of financial literacy. Obviously, we're talking about trading stocks. We're not talking about how to balance a checkbook, but you know, it's in the same vein that people don't look out for new information. I don't know. What do you guys think? What's your take on that? Omar said smart. She took a call on that. Like shared 2 weeks on the table, 2 week expiration. Yeah, man. Something like that. So when we were sitting here, recap on the trade, because I'm still in that. When we were sitting here at 10:09, I said in 2 or 3 minutes, if we didn't push, or if we didn't come back down, I'd close out the trade on my runners. We have pushed back down, so I'm still holding the position. Right now, this is getting much tighter here. So for my runner size, if we can close over the POC here, then I'm going to close out. So I could move my stop up, but I'm going to just leave it breathing room at this point in time. You did see a nice volume push here on 10:11, but that's got shot down right away. So this actually is looking a little exhaustive. Watch this low, which is also where I went to trim some of my runners out here. If that low breaks, we will sweep lower more than likely. So this play is not dead on the short side actually at all. It's just it's a tighter risk point here, using that POC as your stop essentially in this case. I feel like everyone's scared to voice their opinions on that matter. Marcel says, I think at some point you got to ask yourself if it's worth the stress to live paycheck to paycheck. Yeah. Yeah, man. I agree. Unfortunately, I think a lot of people, when times get rough, and this is why I actually like investing in casinos and alcohol stocks. And I think 3 weeks ago we mentioned Bud. We should check up on that. I'm going to check up on Anheuser-Busch in a minute. But when the times get tough, strong people just, put their nose to the grindstone to get it done. A lot of people, drugs, alcohol, promiscuous sex, whatever, hookers, etc. So people do bad things when things get hard because they're coping, essentially. So, all right, we're going to close out the trade here. Okay, all out. All out in profit. Profit. Spelled profit wrong. And I spelled LOL wrong. LOL. All right, let's actually check up on Anheuser-Busch real quick. So, last time I spoke about Anheuser-Busch, we were sitting around, it was pre-earnings, so we're sitting around here, around like 61. So since then we've gone up $2. I mean, it went all the way up to 65, which is pretty good because this one kind of moves like a very gappy snail. Like, it doesn't move very quickly and tends to leave a lot of gaps. And it's kind of, if you guys ever use like a standard deviation, it is floating both sides of the 200 MA right now pretty definitively. So I still think it's trying to find its way here on the daily chart. I'm not overtly bullish or bearish on it. I would lean more bullish on this name. But it's at a point where, I mean, you could draw a pennant here if you wanted to on the weekly. It has been sitting in a base really forever. I mean, this is a monthly chart, by the way. You're going back to like COVID times, and it is real super comfy at like $60. Like, that's the POC there. It is comfy there. It doesn't really go hard or far anywhere. Outside of their product being absolute trash, and I'm not someone who drinks, and I think a lot of people will tell you, and you can tell me if I'm wrong in the comments if you think Budweiser is a good product. I think their product is trash, probably. I think a lot of people tell me that it's like pee. But I think there are probably better alcohol names to pick, but I think alcohol is a good industry to be involved in as we head into Q1 and Q2 specifically. Furthermore, so actually for the rest of the whole 2026, actually, kind of leaning and looking into having more exposure in alcohol in like a Phillips Morris. Not to mention these companies are relatively safe as well. They don't really go anywhere, but I do anticipate them to have more sales. Other companies that you might want to keep an eye out for, like plastic surgery adjacent companies. You got to think of things where people are sad, and even if they don't have the money, they're gonna spend money to feel good, right? Casinos. This is where I'm like interested into next year. More so after Q3, because I still think we lean bullish into Q2. and we're still on track for that right now. Really depends on how January goes. Because as you guys know, I'm looking at 700 for the end of the year still. We got 4 weeks to go, 20 points. It's possible. And I'm looking for 770 by Q2. So I don't think that's far-fetched. I think it's actually pretty reasonable. 20 points in this month is, a decent move. But I'll remind you that we went 30 points in the last 5 days, right? So I think what we're going to look out here for the general market is still me leaning bullish into next year. As long as January goes well, still very bullish Q1, Q2. And then from there, really start to dive into, and I'll do it on this program because we'll still be around, diving into those names of like sinful products, right? Drug and alcohol names, it's like casinos, anything where people are willing to spend money recklessly because they feel bad and they don't care. It's kind of where my head's at. And some of those names right now are actually beaten up too, which kind of lines up pretty well. So that's kind of what the idea I've been toying with recently. Looking at the overall market right now, Nvidia is floating around this 178.80 LOI right now. It's looking like on the daily chart, we're trying to put in a bottom here. We're above the POC. Price action has been sweeping just under the POC, but closing higher every time. We actually haven't closed under the daily POC here. That daily POC is 176.09. So we've moved under. We haven't closed under that at all since back here. So coming down here and sweeping that daily POC and coming back up is actually showing that the bulls are trying to step in on Nvidia. As I said last week, you are 18% from all-time highs. It would make a lot of sense to at least get up into like the mid 180s by the end of the year, like conservatively. I don't really foresee it going much lower. Again, assuming we stay above close above the POC, and most importantly, this 171.58 spot to keep an eye on. Hatchet, oh man. Hatchet says, did I hear about the Zweg? I think that's how you pronounce it. Zweg. Breath thrust. Yes, I have heard about the famous Zwed breath thrust. Man, that's a hard thing to say. Also, I don't know if I'm saying it correctly. But yes, I have heard about it. It's actually pretty cool. I'll see if I can pull it up. I could show you guys if you want. But long story short, I'll just summarize. Long story short, it's an indicator that rarely triggers. When it does, essentially, it's that the market has marked down a good amount and that it marks up very quickly, but due to the breadth of the market moving to the upside to support a further upside move. Last time this happened, I believe was, you can correct me here, actually, I think it was last year or within a year. And then prior to that, it's only happened like 2 or 3 times. So that actually speaks into how crazy volatile now is versus a long time ago. Because I'm pretty sure it's only triggered like a handful of times, and it tends to be a very bullish indicator. So when this indicator does trigger, tends to be, I believe, over the course of a year, like a 20 or 30% move to the upside, like pretty substantial move to the upside, something dramatic like that. So we're almost there, and my understanding is correct. It would need to trigger before December 5th, officially. So look that up if you have interest in that. I could be hopium, right? Right, guys? Like, I wouldn't put too much stock in things like that in general. But it is pretty cool when you see, like, typically a move like that's going to happen when you get a harsh move like this and a sharp reversal. So we got that harsh 3% drop, and then the market was like, nope, the next week. That's typically when you get things like that rely on a big swing in price to happen, because it's showing that the market is resilient, essentially, especially in this case with the RSP being much, 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 much stronger than the SPY, comparatively speaking. Yeah, actually, I think it was in April. I think it was the tariff dip. I think it was. I ran some data over the weekend regarding NVIDIA. ER was a super beat implied move with 7% stock to 5% after hours. Also out open. Yeah, it happens. It happens. SPY was pushing, IWM as well, SMH was, but NVIDIA was still lagging. I'll wait for you to finish your soliloquy, and then I'll recap it, because it seems like you're going to make a point here. Looking at the market right now, you basically double wick to the upside on Tesla, that LOI here. Okay, so you got a lot of confluence here to be careful on Tesla. $433.31. LOI, so first part, it's already a significant point in price. The 50 MA right now is 434.03, so about 30 cents off. You also have this fib spot here at 430.43. And you're really basically wicking Friday's high. So it's not bearish, but if I was paying more attention, that would have been a solid place to short Tesla. If we bounce back up, I might pull the trigger on that. Looking intraday here at the rest of the markets. Yeah, a little mixed baggy. Nvidia is actually looking like the strongest today, funnily enough. VIX is still playing ball with us. We're down near that 1718 LOI spot. Built out a little bit of base, getting a little bit of bounce here. Nothing crazy. IWM showing a little bit of weakness here. Those puts got all the way up. What was the high? Got up to $1.45. Did we hit my price target? Yep. Oh, well. Oh, well. Would have been a good play. But still made money. That's all that matters. Yeah, to summarize what Omar's saying in the chat, I can understand what you're saying. I think the sentiment, in a sense, has kind of driven to that. So Omar says essentially that the sentiment towards NVIDIA seems to have switched from being the market darling to, I don't know if I want to touch that for right now. And I could agree with that to a degree. Again, it almost went to a bear market off the highs, right? So you got to keep that in mind. They almost marked down 20%. I think it was 18. Actually, let's see exactly what it is. High to low. Oh, it did enter officially like a bear market. That was a bear market move, right? 20%. So you went into a bear market for a heartbeat there on NVIDIA before bouncing up. I think the market is just trying to find its fair value. I think when I did my when we went over earnings that day, because remember it opened up and obviously gave it back. Earnings were solid. Everything they said was solid and everything. But again, as I've been saying, every single time NVIDIA has earnings, they have to not only beat, but they have to ultra beat. Like the expectations are so insurmountably high for NVIDIA to continue to perform that having some sort of a failure here in any regard is almost expected. But also, you're like playing with fire if you're going to try to short the thing too. You know what I mean? So is it overvalued? Sure, but it's hard to put. What makes NVIDIA tricky, this is the hard thing. This is the real hard thing in general with AI. Maybe I should record this. We'll do a quick little recording. So a lot of people right now are investing in AI, have an interest in AI. I do. I'm sure you're watching this. You have an interest in AI. And the hardest point about AI is really understanding true value of it. NVIDIA is obviously one of these names that's underneath that microscope all the time as the company, the darling of AI, right? It basically powers a lot of things with AI, and it's got a lot of the stressors on it. And the market's been marking down NVIDIA now since the end of October, and it actually got down to about 20% retracement. So it went into temporarily a bear market here for a short period of time, because I believe the market's really trying to find and understand what the value is for NVIDIA. Now, NVIDIA has fantastic earnings. The potential growth there is still there, but when does the buck stop, right? When we're looking at AI, when we're looking at the implementations of AI, we're looking across the market and seeing other realms of how AI can be used and other ways that these companies can make money. When does the buck stop? And I think that's what we're seeing a lot with NVIDIA right now and a lot of these other AI companies that have hype and they have a lot of drive and there's a lot of potential here, but we don't understand the potential because the potential is uncapped at this point in time, right? You could look at Google, for example, which has marked up, and I made a video on that. Feel free to check it out on my channel. And it says that Google is undervalued, which is a crazy statement because it's at all-time highs, and it's up here. And I still think part of it's undervalued because part of this push here, essentially going back to like the end of October, really more of recent time, mid-November, part of that push here was Gemini 3 coming out and the market going, holy crap. We are undervaluing Gemini 3 in Google. In fact, Gemini itself could be a $2 trillion market cap company. We're already looking at OpenAI as being a $1 trillion company. What is the value of this thing? We don't know. We don't understand yet. And I think that's what the market's having a real struggle with as we're rating and looking at all these AI adjacent companies, is really grasping the value they could provide. And that's where you hear a lot of people talk about being in a bubble. Could we be in a bubble? Sure. The .com thing was the exact same thing. When .com was around, when we have the internet just making its first foray into existence, what is the potential? We don't understand the potential yet, and that's why we're having a hard time understanding the value, because when we don't know how far something can go, how do we properly price it? We don't know as market participants. We're kind of guessing. And to be fair, we will continue guessing until it's understood. And the point of understanding is the bubble popping, of course. When some of these companies that have no earnings, that have no right to be priced at what they are priced at what they are, when we find out, hey, they don't really have a sustainable business model, they get cut off by the throat. Now, that's not going to happen in NVIDIA or Google, obviously. But speaking in relevance to, or I should say in comparison to the fact of how we're trying to price AI in comparison to the .com bubble. And that's why we're seeing, even when there's a little bit of fear here, especially like in NVIDIA here, where we marked down about 20% here, the market's saying at this point, like, this was the darling, this was the number one stock in the stock market, right? It's the biggest stock in the stock market. It is almost a 10% weight on the SPY. That's how massive NVIDIA is at this point in time. It's getting to the point where we're going, is it getting too expensive now? Finally, right? We've said that when this was down at 50, at 100, 150, and now we're finally going as it reached 200. Is this getting too expensive, right? But we don't know. That's what makes it incredibly hard long term, the next year, 2 years. We'll probably have a good grasp on this in the next 2 years, I think. But at least in the next year or two, really trying to understand these AI-based businesses and when certain things happen, again, like Gemini 3 coming out with Google, and the market gets the ability to grasp it a little bit more firmly, to understand it. That was a little SpongeBob meme there for those of you who understand. But to grasp it a little bit more firmly, we saw the power of Gemini 3. We saw what it can do, right? The opportunity there becomes a little bit more tangible, because when I first tell you artificial intelligence, you can do whatever. You go, how much is whatever worth? I don't know. But when you say, this is Gemini 3, and look, I could build a whole website by typing in a paragraph, then you could think of all the things realistically that can actually be tangibly done. And we're slowly getting to that point. And I think that is the point in time where the bubble pops. So understanding that and learning from the past, right? We're trying to learn from what happened with .com in general. And what happened with .com is you had stupid websites just going up doing stupid things because internet. You're kind of getting the same thing with AI because AI, right? But as we're getting to this point of actually grasping the capabilities of these things, you will see real businesses come out of this, like you did back in the .com era, right? And you'll see other ones completely flop and fall on their face. And I think we're slowly approaching that precipice. And again, to reiterate, NVIDIA and Google are not these people, right? Or they're not these companies. But in the same breath, we have to understand what is the actual growth scope, essentially, for NVIDIA. They still put up fantastic numbers every earnings. They're beating, right? They're still beating above expectations as well. So they're doing better than just like beating, they're superseding, right? They're doing fantastic. But when does the buck stop? And then when do we realistically hit that wall of a mature company? For those of you that went to business school, you understand you go to growth, to maturity, and then decline. NVIDIA is still floating in that growth to maturity stage, right? It's essentially at maturity, but where does the buck stop? And that's kind of what we're trying to figure out with AI as a race of human beings on this planet. We're trying to understand the scope, and we don't understand the scope yet, which makes it very hard to accurately price these companies. So just a few things to chew on as you're looking at these companies in general. Not that any of them are bad necessarily, but keep in mind to keep an eye on as we see new LLMs come out, as we see new information come out about AI, how the market reacts and which companies specifically react, because that is where I think you'll find a lot of the opportunity. All right, how's that? I think that was a pretty good spiel. Good spiel, guys. SPY coming down to around the 200 MA. I wouldn't hate if we left a wick and gave me, again, as long as we're closing above this Thursday high, that's still the most bearish or bullish scenario. Let today be the bear day for SPY, right? Let today, we fail to recover the gap, which is fine. We come down and we close red on the day. Great. Tomorrow, still a bear day, still kind of red, whatever. Maybe we get even under Thursday's high and close somewhere around there, but still above the basically 673.95. Okay. Wednesday, we kind of float sideways there in that same range between 673.95 and basically 676. Then Thursday and Friday, we kick it back into gear and hopefully close up here. That's like my ideal scenario for SPY here. But again, very, very, very cautious on being a bear in general. I'd much rather, like you saw, I took a day trade and kind of get out of the way. Because I think the environment is more set up for bulls, especially with volatility still supporting that narrative. We're still gapped up. We're still holding the gap higher here, but I guess we'll kind of see. All right, guys, it is 10:30, so we're probably going to wrap it up here. Good news, I'll be live again tomorrow at 9:15 as well as Wednesday. So you get me for 2 more days this week. And then we're going to have to see what happens because hopefully I'll be quite busy the next 2 weeks and I'll be around to, we'll see. I'll let you guys know when my last stream is going to be for the year because I'll be moving in holidays and whatnot. But we'll still be live in the Discord. I'll still do streams in the Discord where I can. And obviously, like I said, I'm moving, so we'll see, depending on where the move date and everything happens and all the other fun stuff in my personal life, we will determine when there'll be more streams. But you'll at least get me for tomorrow and Wednesday as well at 9:15. So I hope you guys enjoyed the stream today. Thank you for sticking with me as it randomly went down. And I will be seeing you tomorrow morning at 9:15 again. And some will say, you may need an edge to trade. Well, I like to look at things from a different angle. As always, we get right here on the Atomcash angle. Hope you guys have a great rest of your day. Please, please, please trade smart today. And for the rest of this week, for that matter. And remember, precision beats prediction every damn time. I will see you all tomorrow at 9:15 sharp.
The time has passed, and that's a wrap.